Hey everyone, a little update on what's going on with inflation and the economy, and maybe how these Trump tariffs that are coming up here in the future can affect that inflation. Okay, so give me kind of recap. This morning, the CPI came a little bit hotter than what most expected. We're in the 3% range, came out at 3.3% from a CPI rating this morning. The expected was 3.1, so we're above expectation, and that's hot data. You see the market kind of react negatively to that off the bat. Recovered a little bit now, midway through the day. We'll see how it ends up, but ultimately, we're seeing inflation start to creep up, and this is really before we get any tariffs in play here. I mean, we're have not seen the effect of tariffs yet. We're not going to see that for a couple of months. Once the tariff goes into place, it takes a couple of months for that data to come out. So we're not even seeing that yet, but we're already seeing a pickup in inflation. So what does that mean? It can mean a couple of things. So one, the Fed most likely is not going to raise rates potentially at all this year, or lower. I'm sorry, well, not lower rates at all this year. They could raise them. Right now, the projection of when they might lower rates is going to be probably July to October. Was that time frame people thought we might see a lowering of rates? That kind of got pushed back now to December, right, where the first rates might get lowered at that point. So again, this is something that rates not lowering at all, and Trump is really pushing for that. He wants rates to be lowered because for his plan to kind of work, lowering of rates does help the stock market in terms of this tariff stuff that he wants to do as well, kind of offset what could happen there. But ultimately, with inflation going up, the Fed is not going to be inclined to lower rates anytime soon. In fact, if inflation keeps going up, they're going to have to be inclined to raise rates potentially this year instead of lowering them. So what happens here? If that goes down. Well, a couple of things. So one, you got to think in the banking sector. If rates start going up, right, that's not great for them, especially if they're holding a lot of bonds today, which I know a lot of them kind of still are. If you remember back, a couple of years ago, a lot of banks went out of business. They started going bankrupt because they were holding these leveraged 30-year, 20-year treasuries, these bonds that lost a lot of money as rates increased. Well, if rates start going up again, you're going to probably see some similar stuff happen there on that end. So we're going to see a lot of these banks maybe struggle if they're holding a lot of these long-term bond holdings today. In your own portfolios, if you have bonds that are long-term, you're probably going to see some big losses in there, right? If rates were to go up. Okay, so inflation can have a big effect on that end. The stock market itself, so technically inflation going up does not mean stock markets go down. Uh, but what they could go down on is if rates don't look they're going to decrease in the future. So it's something to kind of think about in your portfolio today of kind of where you stand, what that looks like. Ultimately, like commodities, you could see those increase this year. I mean, gold had a record year last year. Um, and silver, and like we could see those hard assets doing well in a high inflationary environment potentially. On the crypto side, Bitcoin's kind of been opposite of gold the last couple of months, so it'll be interesting how the crypto side stuff goes. But ultimately, as an economy, as a whole, of kind of what we're seeing today, ultimately, we see inflation tick up, it's going to hurt the economy. The economy is too hot, essentially. And the Fed is going to be inclined to cool the economy off, right? They're going to have to. Otherwise, inflation will keep spiking like it did a couple of years ago. So, because of this, because of kind of what we're seeing, I do see potentially the Fed either threatening to raise rates or maybe even raising rates potentially this year. If that does end up happening, I think there are some negative effects across the board, but you don't want high inflation. The worst thing that could happen is the Fed does nothing and inflation goes rampant again. Then they have to raise rates by a decent margin and cut it back down to where inflation is supposed to be. So when we look at this again, I think we're in a spot where inflation is right now, and these tariffs hit. Down the road, we could see inflation spike more than what we'd like, which could result in the Fed raising rates, which has a whole other effect on some other things going on today. The real estate market, right? Everything kind of within there is going to hurt if rates start going up here. in the future. So be aware of that, kind of know what's going on. Subscribe to my channel if you haven't done so already. A lot of news that we're going to be coming out with around the economy, around inflation, on the stock market, retirement strategies. We have a whole Social Security playlist. If you're looking at taking Social Security soon, just check those playlists out and give it a like and subscribe below. And we'll talk to you folks again soon. Thanks.